Last week on the Al Nicoletti Show. Without further ado, let's welcome him to the show. My guy, Will Dennis. Let's go, brother.
The budget for the studio has gone up because the intro video was sick.
With the curative deals, there's a lot of investors that are picking up deals where they can't get everybody on board on the same page.
The last frontier, in my opinion, which is how do we fix these hairy deals or these dead leads in our business? Because clearly there's some guys that have been doing it like myself since 2019. There's enough awareness now where guys are starting to dive into, all right, well, how do I go after these not so clean deals anymore?
I think what people are finding is that before they didn't want to touch it.
375, he owns a quarter, so 25%. So his 25% is worth $93,750. We are buying his 25% for 35 grand. This is a 60 plus case spread. Now you're gonna do the probate because it's coming to you. And
let's go, baby.
And I love wholesalers. I was one for a long time. A wholesaler could not do that deal because they can't go get a contract for partial interest on that house. I would actually say 99% of wholesalers, unless they're in my community, do not know how to do the research that Christian knew how to do.
And I think when you put all of that together, these deals have so much momentum, so much possibility, and there's so much potential success behind it. And it really becomes a, like you said, a mindset shift. Shift it from my deal's not dead, it's alive. And how do we figure this out and solve it? Will, always love seeing you, brother. Let's see you soon, man.
Love you too, man. Hey, I love the energy, love the show, and I appreciate you having me, man.
And we're live in the studio. Welcome back to another episode of the Al Nicoletti Show. We are live Wednesday, 8 p.m. Eastern. If you want more content like this, scan the QR code at the top of the screen. You're going to get all of our content from YouTube, all of our social media, Instagram, Facebook. You can find us all over the place. In the show, you can find on Spotify and iTunes and Audible, a lot of other places you can find us. And if you want more content on probates, partitions, and quiet titles and all the curative title world, you know, that buzzword, the curative title world, you got all the videos that are right there. Check it out. And tonight, we have another great episode with another amazing guest, Steve Fingerman. And Steve is a great guy out on West Florida, and I am so pumped to have him in the studio for his first episode on the Al Nicoletti Show. And I'm in the studio. We are ready, and I see everybody that's out there. This is going to be another banger. I got my notepad, I got my pen, and let's rock this thing. Hey everybody, my name is Al Nicoletti. I'm an attorney here in Florida, and welcome to the Al Nicoletti Show, where I bring on real estate super investors, rising rock stars, movers and shakers, and leaders of clubs in their communities that educate, entertain, and inspire all things on Florida real estate, and always going to bring the best in the game. Whatever industry they're in, whether we're talking about land, commercial, shopping centers, residential, Airbnbs, lending, title, we're going to bring the best in the game on how you can take your company to the next level. On my show today, I got the guy, Steve Fingerman, my guy out of West Florida. When I met Steve for the first time, we went out to lunch with Beth Burnett. Shout out to Beth. And Steve and I hit it off. I love his business energy. I love the way he's doing business. He's just got that mindset of, this is how we got to do it. This is how we got to grind. This is how we got to make it happen. And it's awesome to be able to connect with like-minded business people like Steve. So I'm pumped to have Steve on my show. And when I told him about it, he's like, yeah, let's do it. So I'm excited. Without further ado, let's welcome Steve Fingerman to the show. Steve, let's go.
Al, what's up, buddy? It's so great to be here today.
Man, I love seeing you. It's been a while since I've seen you in person right here. So just want to say thanks for coming out. And we're going to make it a fun one for the guests tonight.
It's going to be a good time. I'm so happy to be here. Thank you for having me on. And I think we're due for another lunch.
Steve, we are absolutely due for that lunch. We got to go back and we got to go do it. And I'll be back sometime soon to see you, man.
All right. Awesome. Yeah. Just let me know whenever you're here. Lunch on me this time, because I think you got the last one.
Yeah. Done. You got it. All Steve, right. For those that don't know, just a little bit of a background for them getting into this industry and where you are right now.
So where we are right now is I am the owner of eLoans Mortgage, People's Trust Realty, and Trusted Title. People's Trust is a brokerage that I started about 5 or 6 years ago. It was built around the lending game. I've been a lender for 27 years, almost 28 years, which, God, that's hard to admit. Like 27 years goes by like that. But we built the other two companies around the lending. So we had the lending down perfected. And then we built a really good model for our agents. We're in growth mode right now. We're up to, I believe, 132 agents in People's Trust. And I probably have 3 or 4 in onboarding at any given time, it seems like. So we're growing and we're supporting our agents and we're just giving them a better way to do business.
Love that. Steve, you're in the trenches every single day with your business, with loans and title and all the messy things that are happening in the real estate world. What are some of the most biggest things that you're seeing right now when it comes to whether what realtors are doing? What's like hot right now in your market?
I can't tell you that there's any one thing, right? Homes that are priced well are still obviously selling. The market's definitely a little bit tougher now than it was just a couple of years ago. So you have to really be strategic on how you price things and how you comp things out. If you're above that comp, I'm seeing extended market times, over 90 days for sure. Some of them over 180 if they're really way out on the price. So price things well, but more importantly, like right now is when you work on your relationships, right? You focus on your sphere, you go back to your database, you make calls and keep in constant contact. The agents that I see doing that and implementing those strategies every day are the ones that I see are my top producers. Those are the folks that did 7, 10, 15 million and up. And then the ones that are just kind of sitting, waiting for the phone to ring or waiting for something to happen, those are going to be the agents that are in the statistic of, what was it, like 970,000 sold 0 to 1 home last year. That's a direct result of that type of action or lack of action. So if you're taking action right now, I think you'll do fine. This is the time to sort of sow your seeds so that when it picks up, you're going to do really, really well. And I see it picking up already. So I think that 2026 is going to be a better year than the prior. And it's only going to go up from here.
Yeah. Oh, I think this market is already changing. I think the market's already changing where we're seeing a big difference from what it was in years past. And then there's a lot of hope that we can see that's coming. And whether the rates come down or there's going to end up being more opportunities for properties and maybe fluctuations in inventory, we're going to see that happen. But like you said, most important thing you can do in any kind of market, especially now, is further the relationships and really keep in touch with your clientels, your current clients, your past clients, and lean on that, because that is something that will help you and others, in your business and grow. And then that way you have continuity and you can keep growing from there. And Steve, talk to us a little bit about what some realtors, I guess, or even investors should be looking out for in this market. I know there's been some new changes with FISN. I know there's been some other changes with other requirements. What are some things that realtors, investors really need to hone in on in their skills and pay attention to?
Well, look, if you're a realtor right now, it's really back to basics. Focus on the things that are tried and true and work. So, look, for most agents, right, you have hundreds of contacts within your own phone. And statistically speaking, there's a weird statistic that when I tell you, it's going to blow your mind. Like 25% of the people that are in your phone right now will be either directly or indirectly involved in a real estate transaction in the next 12 months. So now take your average commission as a realtor. How many contacts do you have in your phone? Let's say you only know 100 people. 25 of those people will be involved in a real estate deal directly or indirectly, meaning that if it's not them, it's somebody they immediately know, and it's going to happen within the next 12 months. So what would happen if you called every contact and just said, hey, it's Steve. I'm just calling to see how are the kids? How's the house? How's the family? How's everything going? By the way, if you're thinking about selling, would you get with me? And if you happen to know anybody looking to buy or sell, make the introduction for me. I would really appreciate it. I don't really ask for referrals. I ask for introductions. That's a lot less uncomfortable. That's more comfortable for people to make an introduction versus give a referral, right? If I give you a referral, I'm now taking responsibility. I hope all goes well. If I just make an introduction, Al meet Joe, Joe meet Al, I'm out. I have no responsibility. That's a lot more comfortable mentally for most people. So when you ask for that, ask for an introduction versus asking for a referral. And it's very effective. I have guys that sold dozens of houses last year, and all they did was call the people already in their phone.
Mm-hmm. Yeah.
For an investor, obviously, same adage as always: be smart on what you're buying. Your money is not made on the exit; it's made on the purchase. And really, just don't buy dumb things. Look at your comps. Look at what the market's doing. And more importantly than just looking at comps, if I'm an investor, because I also buy and flip some homes, I always look at what are my days on market looking like, because I have to factor in what is my carry cost going to be, how long is it going to take me to exit, and how aggressive do I have to get on the exit to beat the days on market. The days on market are at 78 days. I don't want to sell in 78. I want to sell in 10, right?
Mm-hmm.
So how aggressive am I going to have to be, and what's that going to do to my bottom line? Am I able to pay whatever it is that we're at on this property and still get out of it within my margins and make my requirements? And if the answer is no, you move on. You don't buy it. A lot of people are getting burned by buying things just for the sake of buying them. And then they end up at my doorstep 6 to 7 months later when the rehab is done going, what do I do now? Like, the house is not selling. We've been on the market 6.5 months. I have a balloon, maybe I have a fix and flip loan and I have a balloon coming up. That's due in 12 months. I got 4 months left to pay this thing off and it's not moving. And a lot of times what I find in that situation is you overpaid, you overimproved, and you don't have the margin left anymore to drop the price where it really needs to be so you can exit out of it.
Mm-hmm.
It's not a comfortable conversation.
Yeah. And with that being said, like, I feel like what you're basically getting into is how much due diligence is involved before getting into some of these transactions, and people just doing their pre-buy underwritings or being able to kind of know where things are at currently with loans and that matter. Steve, one of the things that we've been seeing a lot more of, and I think it'll surprise a lot of people, but I think what people are seeing more of now are short sales. I think what happened is a lot of people a couple of years ago bought really, really high, and their loans ends up being higher. And then now prices, especially in the Florida market, really cooled off a bit. And especially like Cape Coral, some of these other markets really cooled off. And so now people are in that different kind of position. And if you fall behind in your mortgage, you fall behind in your payments, now you're in that underwater situation. So short sales seem to have like really revived. And I think recently you've been really getting into short sales and educating some people. So talk to us a little bit about short sales, because there's some people that don't remember that era.
We have a lot of agents even that weren't in those times. They came in after the 2008 stuff. But yeah, it's funny. I'm seeing short sales again. And I haven't seen them since what, 08, 9, 10. We did them into like 13, and then they kind of went away as the market recovered. But I'm seeing them again. In fact, I just taught my agents a whole class on short sales, on how to do them, how to negotiate with the bank, what you're going to need, what documents. We spent a couple hours on it to make sure that they know how to navigate through that process really, really well. And back in like 08, I did hundreds of them. So I got very good at negotiating with banks and knowing and understanding what they're going to need, understanding what the underlying mortgage insurance might look like. So you need to understand all of the nuances that go into short sales, and we just got done teaching about them. But it's a little different, right? It's not the same as what we saw in 2008. 2008, it was more like a shame on you event. People sort of looked down on you because we did crazy loans, and maybe you did a no doc loan and there was this sediment, like maybe it was your own fault. This is completely different. This is not that at all. This is people that likely bought around COVID times when the prices were just high, and they were paying over the ask price in a lot of these cases. The taxes went up on a lot of them. The escrow payment doubles. And now you're at a lower value. You're not quite as bad as you were in '08, but just a little bit under market is enough to warrant a short sale because you just don't have the cash to bring to the table. And that could be like maybe you're short 20 grand.
Yeah.
A lot of sellers don't want to bring 20 grand to a table to get out from underneath a property where the escrow payment has gone up. And a lot of them too were finding that, remember the old saying, what was it? Marry the house, date the rate. Don't worry about it, buy the house and refi later. Well, like it's later and rates are not that much different.
Yeah.
So I hated that when they were marketing that way. And here we are 3 years later, those temporary buy downs are done. The payment's back to your normal payment.
Yeah.
And there's no point in refinancing because you're not going to save that much money. And the value is not quite the same as it was. And that makes it a lot tougher for a lot of people. So I'm not seeing thousands of short sales, but I'm seeing enough to warrant some education and to at least make sure that we all understand what that looks like and what goes into putting the deal like that together.
Yeah, Steven, when you keep talking, I keep thinking of some interesting questions that can maybe really be valuable for the audience, and that's what I love about the show and bringing guests like you on. A lot of investors and realtors run into reverse mortgages, and they run into these deals where the payoff is higher than what the value that they're going to offer or be able to list. What are some strategies, and this could help a lot of people because they run into these deals and go, are these dead deals? What are some strategies to cutting right through that and being able to potentially lower that loan balance or come to terms with the lender to be able to making it a dead deal alive?
It really depends on the loan. You mentioned reverse mortgage, which is really interesting to me because those are a really different animal, right? That's a HUD-backed insured loan. Um, there's a policy behind that loan. That means that there's a guarantee of payment to the bank at certain points. And HUD has their own specific rules on these where they will appraise the house as an FHA appraisal. And just like an FHA loan, it sticks with that property for the next 120 days. So whatever that answer is on that appraisal that HUD got, that is your payoff. And they do not really deviate as far as I've seen, maybe in a very, very extenuating circumstance, but I would say that's far and few in between. So for most of us as investors, if we're looking at something with an underlying reverse mortgage, like I pretty well know up front, either that appraisal meets what my criteria is to buy it or it doesn't. And if it doesn't, I'll see you in 120 days. Like it's probably not my deal. And I'm okay with that. That's what we touched on before, right? Like I'm okay with walking away from a deal. And a lot of investors make that mistake. They don't know when to walk away and just move on to the next deal.
Yeah, and so when dealing with lenders, is there anything that realtors or investors can provide that would really help these situations, like with whether it's reverse mortgages or regular mortgages and short sales? Like, is there anything that would help the cause or be useful to a lender that would help them reconsider lowering that loan balance or at least coming in a little bit more? And because I've heard stats maybe in the last year or a couple of years that when it comes to short sales, you're only really getting like a 10% cut, if that, if they even do that. So is there anything that they could use that could help their cause?
You have to really understand what the bank is thinking and what they're looking at. And you have to remember that the bank's running their analysis just like you are as the investor or maybe even as the realtor. And what they're looking at is the total amount of loss that I am facing versus how much am I going to recoup if I go direction A, B, C, or D. And they usually have multiple directions they can go to, right? I can foreclose and then I could sell it on the courthouse steps. And usually that creates some kind of a bidding apparatus where I'm probably going to get pretty close or closer to my loan balance, particularly if more people show up to bid. That usually works out well for the bank. I'm also looking as the bank, do I have insurance on this loan? And what does my stop loss look like on that policy? And if I just simply foreclosed and sold it at the courthouse steps, How much is that insurance claim? How long do I have to wait for it? Um, and how is that going to mitigate my loss? And then I'm going to compare that to this short sale offer. And I'm going to just determine really simple. Look, there's no emotion with banks. This is financial decisions, right? Like financial 101. Which way do I lose or keep the most money? And that's going to be the answer. So when you're negotiating, you have to start really thinking about those things and think to yourself, look, I have a conventional loan. What was their purchase price? What's their loan balance? I already know just from looking at that they did not put 20% down. Now I know there's PMI. The average PMI coverage is 28%. Let's say it's 22%, depending on what kind of loan and loan of values and things like that, right? So I know at least 20% of loan is guaranteed or covered by a policy. How much is my short sale offer? How much litigation is the bank going to save? What's the average cost of litigation? And I negotiate based on those things so that I can make my case to this negotiator at the bank who probably doesn't understand half of this crap, just has a script of guidelines, and that's what he has to or she has to adhere to. But you need to present your information in a way that it fits what they're presented with for their guidelines. Like they know they're looking at value of the property, they're looking at the PMI, they're looking at this, they're looking at that, and then they're comparing it to your net offer. And if your net offer doesn't line up, your short sale is not approved. Simple as that.
Yeah, it's really all about backing it up and being able to support your position, right?
Yeah,
I
you
feel
have to make your case.
got to make your case. Got to have the right documentation. Got to be able to like in a real estate deal with like distressed property. If a seller thinks that the house is worth $1 million, it's like, well, but now you need things with the roof, the foundation's wrong. This has got to be replaced. This is going to be a full tear down. It's like, and the value's not there. So like same thing with being able to explain that to a seller or being able to explain that to any real estate professional. It's the same thing in the underwriting world with loans and lenders. So
yeah. I mean, look, these short sales are like, I call it unqualifying the client, right? Think of all the things your client did to qualify, the hoops they went through. They showed their income, they showed this, they showed assets, they did all this. Now we're doing all that opposite. So we're still showing the financial documentation, but the idea and the goal behind it is to show that they no longer have the ability to repay as agreed, whereas before they proved they had the ability to pay as agreed. So we're doing everything we did before. We're just doing it in the opposite direction.
yeah,
And if you think yourself that way, you'll gather the sufficient documents. I love that you mentioned about think about what the house needs work wise. And I would suggest highly that agents start accounting for that and getting contractor bids, actual licensed contractor bids, not Joe the handyman, somebody who has a CGC number, a license number, an insurance policy, is bonded, insured, all of that, to give you professional bids to accompany your short sale package. It used to be like submit the RMA form. Remember those back then? So they got rid of the RMA forms, but every bank has a similar version of those forms. So submit all the forms to the bank, submit your contractor bids, write a letter of detail about the condition of the property and what you saw is wrong with it and why you have these bids. And also make sure that you have a really good hardship letter from your client. Like, strategic short sale is not a thing. Like if your client makes $200,000 a year and just is 50 grand underwater and doesn't need the big house anymore, which we recently have someone similar, guess what? That's not a short sale. Like the bank's never going to go along with that one. That person has the ability to repay. So there's no such thing anymore in the short sale world as doing something strategically.
Yeah.
You truly have to have a defined hardship, and it has to be an eligible hardship. Like it can't just be stub my toe, didn't feel like working today. Um, I had a horrible accident and can't work, and I'm not capable of it, and so therefore I have a curtailment of income. That's a legitimate hardship. Medical, divorce, life-changing events, things that you cannot control that curtail your income to make it to the point where you just can't afford this. And now, by the way, it also needs a roof, and I can't afford that, and it needs this, and it needs that. That's how you get your short sale approved.
Yeah. And I think that's gold for people, right? Like I can think of so many people have asked me like, oh, we got a reverse mortgage and now the payoff's high. And now we got a short sale. Like we don't handle short sales in the office, but we're hearing more about people running into these the way that the market's going. And I'm thinking to myself, well, there's got to be ways. There's got to be some ideas or creative thought processes. And I love what you're talking about when it comes to financials. I'm sure that's a given for people that do short sales all the time. It's like, yeah, you got to pull the financials, but I feel like there's a lot of people that don't think about stuff like that, or the licensed contractor. And I think that could help people when it comes to short sales more. And hey, maybe the market picks back up all of a sudden. We're all back in equity positions. So,
And it will. Look, it's going to come back. It's going to pick up. We're always cyclical. I already see more loan application. A higher loan volume is coming. We've had a pretty good January. We're into a really decent February, off to a good start. I saw more transactions in January than I did in December, which is a really promising sign. I think as we get into more of 2026, second, third quarter on, will improve. Conditions will improve. Do I see it booming necessarily in this next 6 months? Probably not, but that's okay. We're on the right track. We're swinging back the right way. It'll be interesting to see what rates do. Powell is exiting. We have a new guy coming in. We don't yet know how aggressive or non-aggressive he's going to be. I know the administration wants him to be very aggressive, but that doesn't necessarily mean that's going to fall in line that way. And I don't necessarily think that's really good either. Like, I want rates to go down, don't get me wrong. Do I want them to drop 150 basis points right out of the gate? Absolutely not. I think that would be horrible for our long-term economy and affordability and inflation and all kinds of other things. You create other problems by solving some short-term problems. So slow and steady sort of wins the race in this, I think. So is it realistic to drop 3/4 of a point maybe in the next 2 to 3/4 of this year? Yeah, I think so. I don't know that we'll get to 100 basis points. If we do, that'd be great, because guess what happens when you take 1% out of this market? The market all of a sudden goes crazy. Everybody wakes up and goes right back into it, jumps off that fence, and then we're back into bidding wars and things like that. I think we'll see some of that in certain geographical areas in this year, but I don't think it'll be global. Like, it's not going to be widespread. Maybe this time next year that might be different.
yeah,
For now, we're going to chug along at a fairly decent pace, and that's okay.
yeah, slow and steady does win the race. I'm glad you brought that up. Steve, have you been keeping tabs with FISN?
Probably not as much as I should, but I know there's some changes.
Yeah. Are you able to get into some of the changes that some realtors and some investors probably should know when it comes to that title end of reporting?
We can get into some of it. Patrick runs my title company for me. So he really deals with a lot of the title stuff, the finance side. But sure, we can talk about it.
Yeah, because I think one of the hot topics that a lot of people have brought up, at least in the title world, has been the FISN requirement, the thing that now they got to report to the government when you're doing the transaction. And I've seen a lot more title companies pivot more to that. Just on a surface level, thoughts or what have you seen, or what are some things probably people need to be aware of?
I mean, it's like any other regulatory change. It is what it is, and if this is what needs to happen, then that's what needs to happen. I can't tell you that there's any magic pill here. There are requirements. You follow the requirements. That's it. Honestly, it's like, I don't complicate this at all. I'm not giving anybody advice on how to not fulfill those requirements or skirt around them. I don't think there are ways to do that. In fact, I don't want to know if there are ways to do that. Look, just follow what your title professional is telling you to do. Let them do their job. And, you're already trading commodity, right? Like, you're investing, you're buying and selling, you're hopefully making a really good living at it. If there's some requirements of you to be able to do that in this country, then so be it. Follow the requirements and don't play stupid games.
Yeah.
Honestly, that's my best advice. Like, don't play stupid games.
And it's just, I heard about it recently, and I know a lot of the title companies have been.
Have you heard people complaining about it? Because we haven't really seen that.
I don't know if it's gotten to that point yet, and I don't know. We'll it's one of those things we'll just have to see if it gets to that point. But I just know that that's been a new thing that has happened in the last couple months that of the FISA reporting with the title companies and the businesses. So it's just, there's always a lot of pivots and changes that happen in real estate, and I just feel like people are need to be prepared, should be prepared, and
Yeah.
it's just part of the industry we're in.
I don't think it's going to have any dramatic effect. Not like some of the other major changes we've seen over the years. So, yeah, business as usual for the most part. Just
Yeah.
carry on.
And you touched on something before. What is one of the most important things people need to know when being with a title company? Like, how important is that title company in your process?
Title's one of those things that's really interesting, right? Because probably the most boring part of this business is the title business, right? There's nothing exciting or sexy about title at all, but it's also like the most important part of it. That's literally how you're taking ownership to your property. Those are the people that are in charge of making sure that you get what we call clear and marketable title, meaning you get this piece of paper that says you own it and there's nobody else that can claim ownership against the property that you're spending your hard-earned money on. And that's the title company's job, to make sure that that happens for you, so that Joe Blow can't come knocking on your door a year later and say, hey, the last owner owed me $1 million and now you do too. And guess what? I'm leaning this house, or I have a lien on this house, and nobody caught it. It's vital. It's vital that you have a really good title agent that understands how to solve problems and understands what to really be looking out for to protect your best interest. The other thing that you need is that they have to be communicative. Like, you have to be able to talk to them. Uh, we have some great title companies, and myself included. Trusted Title does a really good job. They answer every time. Josh Browerman, who runs the office for me, is brilliant. I call him like the title savant because I've seen him solve problems that I don't think in all my years I could have ever solved. He really, really knows his stuff. And they're available. And there's some other title companies in town that if I call them tomorrow, I'm going to have a really great experience. And we've closed with some because we have a mortgage company. So we close with everybody, where I know it's going to be a problem. Like, just from the time I see the order come in, I go, oh, it's them again. It's going to be a disaster. So work with somebody that you're very comfortable with, that knows what they're doing, and that can also run searches for you without necessarily having to process an entire order, right? Because if you're going to ever get into the game of going to bid on the courthouse steps, you better be really, really cautious about what you're bidding on, and have a really solid relationship with a title company that can do your initial searches for you, so that before you get there, you know exactly what is leaned against this property, and you're not falling into a category where you're going to end up at somebody's office like mine. When I got this great deal, it was only $20,000 at the tax sale. But then 2 months ago, this bank filed a foreclosure against me, and there's 380,000 owed to them, and the property's only worth 200.
Yeah.
That happens.
Yeah. And I tell people all the time, it's just so critical that you get with a title company that you mesh well with, you get along with, because the title company part of the process is easily one of the most important cogs in the process. Like,
Absolutely.
that makes or breaks your deal. Like, being able to get things resolved through title underwriting. A lot of people don't realize that there's the title company, and then there's the underwriters like Chicago, Lion, Old Republic, all these different underwriters that are the ones that are making the calls on the title. And so it's really important to understand this process, because there's a lot of different things that go on in the underwriting process for title, and being able to have that relationship with a great title company just changes everything in your real estate deal. And I see it all the time for investors that if you're going to do this, or realtors, you're going to do this, you got to get with somebody that understands this, so the title issues can be resolved. It's one of the biggest parts of it, right? You can have the legal side, you can have the upfront side with research, but at the end of the day, your deal closes. So this is important as much as it is to have the right lender, to have the right loan officer to understand like how are things underwritten. Can you get the best rate for your kind of deal, right? And just one thing that just came to my mind, Steve, because I love how we can ping pong around, bounce around. Is there I know rates are pretty much set in loans, just kind of across the board. Is there anything that somebody could provide, like we were talking about supporting documentation, that would help bring the interest rate even lower?
There's a few things that you can utilize to bring the rates lower. In fact, not that long ago, I wrote my first book was How to Shop Like a Boss. It was an insider's guide to mortgages and home buying. And I literally give you like all my 27 years of secrets of exactly how to shop against people like me. How do you negotiate a better rate? What do you look for when you're looking through the home and trying to negotiate a deal on your home? And what I'm trying to teach people is one is understand how this process works, right? Understand that there really is no one published rate. The most common question we get, what's the rate today? We don't know. I can't really tell you what the rate is because there is no rate that's the rate. There's a series of rates that we get as lenders, and there's a margin on them. And it starts at one point, which is the lowest point, and goes to the highest point. That changes every day. And depending on where you pick the rate in between, is how much money we make. And so I can choose to give you a loan at the lowest rate possible. And maybe that's at like 5.5% today or a little bit lower, but that doesn't make me any money as a bank or a lender. And it doesn't matter whether I'm a bank lender, we all have those margins or yield or service release premiums that we work off in order to be profitable.
Mhm.
And so the real honest conversation is what are you trying to accomplish? How long you're really going to be in this home or this loan? And then what is the base rate today? What does it cost to get to that versus what does it not cost to go a little bit higher? And are you going to recapture the cost of it in the first 60 months of the loan? If you recapture it, that's a pretty good deal. Spend the money, get the lowest rate. If you don't recapture the cost of doing something in the first 5 years of the loan, don't spend your money. It's really a simple equation that the industry likes to kind of keep hidden. Nobody wants to talk about how we really make any money, how we get a yield or a service release premium or whatever you want to label it,
Mhm.
the junk things that we call things in this business. But it's a lot easier when you're transparent, right? If you and I were talking about borrowing money, and I told you you can borrow money at 5.5%, but you're going to bring 2% more to the closing table of whatever your loan amount is, or you can borrow money at 5.75 and you save yourself the 2%, and your payment difference is maybe like $120 a month. Are you going to spend that money?
Yeah.
I don't know. Everybody's a little bit different. Maybe you will, maybe you won't. Odds are you probably won't. And so the lowest rate is kind of negligible at that point, right? And that's the key is we have to educate the consumers so that they understand what finances look like and make really good decisions.
Yeah, it just really comes down to a lot of analysis and doing the math, right?
Yeah.
Getting an understanding of where you're going to be at based off the numbers. And I think what happens is people kind of just jump into a lot of these and they don't do the math. They don't see like the 60-month result or 90-month result. Like what, doing that analysis is a game changer.
It really is. And, unfortunately, we have a lot of lenders that won't do that analysis for you either. Uh, and it's a shame because they're not really giving you the information that you need to make an educated decision. I always prefer the customer know more than I do. And so we'll tell you everything that we know and maybe then some, and you make an informed decision. And hopefully, when it's time for you to upgrade 5 years, 10 years, 15 years later, we're still here and you see us again and we earn your business and we earn your introductions to your friends and family. And that's how I've survived for 27 years. That's why the company has grown. That's why we're still here. And that's why we wait. I've been here since before '08. Like I started this in '98. And so we survived the recession of the '90s. We survived the tech bubbles and we survived 2008, the financial crisis. We're here now. We're doing well as a company. We've added on. We've built a real estate business around it and a title business around it. We've got over 130 agents right now, 6 loan officers, and we're doing okay. And it's largely because we're transparent in everything that we do.
Absolutely. Yeah. You're a great businessman and we love working with you. And it's just a true testament to your years of experience being in the industry. Right. I mean, you've seen different phases and cycles, and it sounds like what you've been able to do and learn from has just translated to the growth of your team and being able to just generate that business, and it's thriving. It's consistent, and I'm just so happy you're able to bring this knowledge to everybody and be able to share this kind of stuff, because it's always valuable to people in our industry that can learn so much from others, and we can grow and be a part of this industry together. So Steve,
Absolutely.
this has been so much fun. We made sure to make sure we'll cycle the content of where people can find you, how people can locate you, and it's great because we love having guests like you on the show. Steve, this is a blast. I can't wait for us to get lunch and see each other again. As I do on the Al Nicoletti Show, I do a segment called Final Words, Final Thoughts. Any lasting impressions or tips and tricks for the audience that's out there? So as I do, final words, final thoughts, Steve Fingerman.
Thank you, Al. It was so great to be here. Thank you so much for having me on. We definitely need to have lunch. That's for sure. I'm starving here. I think I've lost like 40 pounds waiting on lunch with you. So we need to do that soon before I wither away. Final thoughts are, look, if you're a consumer, work with people that are going to be very transparent with you, will give you the information that you need. And most importantly, work with folks that are local, that know your market. Wherever it is that you're watching this, whatever town that you're in, go work with the local people in your town. Meaning, forget about the internet lenders and the big box banks. They don't usually have your best interest in mind. And not that there's anything wrong with them, that's just not their model, that's not their business. And more importantly, these national companies don't know your local market's intricacies the way your local lender and mortgage brokers do. They just don't. Like, I'm here in Hernando County in Spring Hill, Florida. We're a fairly small town. If you're coming from 3 towns over to appraise property here, you may not know my market. If you're coming from Tampa to appraise property here, you're probably a great appraiser, but you may not have all the MLSs that we have because our county is split between 2 different MLSs. And somebody south of us may not know that. Somebody coming from Lakeland or Orlando because Wells Fargo told them to appraise this house probably doesn't know that. And when they miss half the data, you run into a lot of problems closing your transaction. So please, I beg you, local mortgage broker, local lender, always it's going to do better for you than a big box company. If you're an agent and you're here in Hernando County, Tampa Bay area, give me a call. We're growing and expanding. I charge my agents $295 a transaction. I don't charge any more fees than that, and I give and build massive value. You have access to me 24/7. I'm very responsive as the broker. We have PTR University. We have in-house lending, in-house title. Everything you need here to succeed is under one roof, including all your training and all support. And you don't have to pay the big box fees in order to get value. You pay only $295 here. So that's cool. And if you're out there watching this as a realtor, you want to talk to me, my direct line is 727-946-0904. Watch out for short sales. If you're doing things that are a little bit uncomfortable to you, that's okay. That's how we learn and grow. But make sure you have a good mentor. Make sure you have somebody that you can go consult with that will walk you through these new processes so that you're comfortable and you represent your clients well.
I love those thoughts, Steve, and you said it so well. I mean, at the end of the day, it's giving back, and it's that giving mentality for people, and being transparent, being ethical, running a great business, and at the end of the day, you're providing that back to the community. So, loved your thoughts right there, and of course, being uncomfortable. That's what it's all about. You got to be uncomfortable to grow. A lot of
Thank
people
you.
want to be comfortable, and then that's why they stay stagnant, right? Being uncomfortable gives you that opportunity to just take off, and that trajectory is going to grow. So love those thoughts, Steve. You're the man. Always appreciate you, brother. And we'll definitely stay in touch. And I know I'll be seeing you soon on the West Coast sometime in the near future.
Sounds great, man. I'm looking forward to it. Thank you so much for having me on.
Thank you so much, Steve. We'll see you soon, man.
All right. Talk soon. Bye-bye.
Bye. Wow. All right. Awesome. Anybody missed that episode? You got to go back. You got to check that out. Steve's a great guy, great businessman. I loved meeting him when I did a couple of years ago. It's crazy how time flies, and we stayed in touch. And I'm seeing what he's doing, and it's great. Like I think we all need to take a step back to realize what's going on in our market. And I think a lot of people jump into these deals and they see something and it's like, well, wait a second, is it a short sale? Is it something going on? Like doing your due diligence and getting into some of these things, you got to be able to know, like, wait, what is this? How is this? How do we solve this? And, I think learning from people like Steve on loans and short sales can be very helpful for people that are doing deals. So you got to check that out. And if you want more content on the Al Nicoletti Show, scan the QR code at the bottom of the screen and you'll find everything on our social media. And don't forget to check out all the things on the curative title niche stuff that we're posting there with the probates and quiet titles and all the messy things that are out there in our industry, at least in Florida. And we'll see you next Wednesday night. Have a great night, everybody. Take care.